Hello and welcome to the fourth episode of Eagle Investors Market Recap. My name is Vishu Namburi and I'm the Chief Investment Officer here at Eagle Investors. Today is Sunday, April 12th. Happy Easter, everyone. And in today's episode, we'll be going over the Federal Reserve measures, um, the OPEC Plus meeting. We'll be going over the coronavirus update and discussing new cases that we're seeing here in Asia and incoming economic data. We'll also be going over the fourth stimulus package that we talked about a little bit last week, but um, this week we've seen new developments coming out, and we'll be talking about the market outlook from here. In terms of the market performance, the S&P 500 is down 14% year to date here. And in terms of this week, we saw a historic week with the S&P 500 moving up 10.9%, which has been a record setting over the past 79 years. Now, in terms of the Federal Reserve measures, on Thursday we saw the Federal Reserve announce another $2.3 trillion in buying. And they also created a new special purchase vehicle to buy $500 billion in municipalities. They will now buy fallen angels, which are companies that were downgraded from investment grade companies after March 22nd. Now they will also be buying junk bond ETFs, and they're specifically looking into buying the ETF called HYG. They will also be buying PPP and CARE loans from here, and they're expanding existing special purchase vehicles as well. Now, in terms of some charts and data that I just wanted to share, so in terms of the Federal Reserve balance sheet, we saw the Federal Reserve cross $6 trillion within their balance sheet, and you can see this significant uptick over the past month from 4.2 to over 6 trillion. And another thing to look into is how this is going to impact the economy from here and how they're going to unwind the balance sheet. In terms of the strict impact this will make is to pay this off, they'll either have to there will be an increase in inflation and there could be an increase in taxes as well. Now, in terms of something that I found interesting as well, I started looking into the assets and liabilities of specific commercial banks within the United States. Now, some key numbers that stood out to me in terms of the percent change just over the months, February to March, they've been so significant within the commercial and industrial loan space. As you can see here, we saw an increase from 2.1% to 115.6%. And this has me to believe that there are specific industries that are in need of commercial and industrial loans. Something that I've been looking into is seeing specific energy companies that might need this, consumer staples companies that might need this as well, and looking into specific healthcare companies that might need it to pull in more resources too. Another number that stood out to me is the total cash assets. That increased by 302% in the month of March as well. So these are key figures that I just thought stood out to me, and this could be something to look into soon as well. Now, in terms of what the Fed might do from here, I think they'll be looking into adding liquidity into the commercial paper space as well as supporting the CD markets. I think they will also look into supporting the forex swap market more from here as well. Now, in terms of the OPEC Plus meeting on Thursday, we saw an agreement to reduce to cut production by 10 million barrels per day. Now, I think these numbers are not enough, just due to the amount of supply gluts we've seen over the past couple months, and we've also seen demand decrease significantly as well. And just demand alone, this shows that there are expectations that demand's falling by 10 million to 15 million barrels per day just due to coronavirus. So, so I think these might not be significant enough, and we could potentially see a decrease in oil further if these are the only cuts we see from here. We saw oil prices go down the day the day of Thursday, um, but they were going up significantly before it just due to optimism of supply cuts. So another thing that I was looking into as well was the fact that tankers specifically, um, uh, they after there was announcement of supply side or oil cuts from here, they fell down significantly, but they've recovered since then, just due to the fact that they're they didn't get a 15 million barrel cut, which I believe might be the reason why there wasn't a significant downturn. Now, in terms of the coronavirus update, the coronavirus cases have just crossed 1.8 million cases, and the U.S. has surpassed Italy for the number of deaths as well. Now, in terms of uh, specific hot zones within the United States, we're seeing we're seeing certain cities getting closer to an apex from here. Specifically, looking into New York, there are reports coming out that we might reach an apex sooner than expected, and the number of deaths coming out of the United States might be lower than expected as well. But something to keep an eye out is the number of new cases within Asia. So looking into um, the second wave in specific spots within Asia that are opening up after the coronavirus. So if we see the coronavirus continue to spread within Asia and the second wave becomes more significant, then we could potentially see a further lockdown from here. Now, in terms of incoming economic data, we saw jobless claims come out to 6.6 million, and we saw over the past 3 weeks we saw it cross over 15 million. So these are significant numbers, and I believe that they'll only continue to increase as this lockdown continues. Now, in terms of estimates of the GDP, we saw estimates for Q1 of 2020 to decline by at least 15% year over year, and next quarter we are they're projecting a decline as well. Now, in terms of the fourth stimulus package coming out of the government, there are expectations that it will be over a $1 trillion bill. And last week I said that they were looking into specifically supporting the infrastructure industry. But now there are reports coming out that they'll be focusing on trying to stabilize specific businesses and looking into supporting healthcare as well. Now, in terms of the market outlook from here, I believe that for the S&P 500 to push past this 2,800 level, we'll have to see significant drug results coming out of Gilead Sciences and Regeneron as well. If the drug trials come out positive, then we could potentially see a run up further from here. If not, I believe that we'll stay range bound from here, and we could potentially see a downturn as well. But to support these 2,800 levels, we need to see good news coming out on the coronavirus front. Now, in terms of the VIX is currently at 41.67. So this is still a relatively high number, and over the past week, we saw the number not change significantly, even though the S&P 500 was up 10.9%. And this is due to the fact that there's still uncertainty within the markets, and some institutions are still keeping their hedges just in case we see another downturn from here. Now, in terms of the fear and greed index, we actually saw optimism uh, become much better compared to last week. Just 1 week ago, the market was in extreme fear with the um, index of 21. Now we're seeing it at 43. So we're seeing much more optimism in the market, just in terms of the retail side. Now, in terms of gold performance, gold had a great week this week, and we saw gold reach the 1740 mark. Like I said before, I believe that inflation will will grow from here, and gold is a key a key long-term hold within portfolios, as the Federal Reserve is just pumping money into the economy. That just means that inflation will continue to grow from here. Um, and as a result, I believe gold is a key buy here. And something else that I will be looking into is say that we do get another downturn. I believe that the Federal Reserve will look into potentially buying equities as well and trying to artificially pump out the markets through that way as well. It would have to be a significant downturn, but if that did happen, I believe that gold would fall in the short term as well, just because equities are falling as well, and that could set investors into panic mode, and they could buy. They would institutions and investors would be selling their current portfolios and rushing to cash, and as a result, gold would fall as well, which is what we did see during the March time frame. Now that's it for the Eagle Investors Market Recap episode 4. Thank you for tuning in. Um, in terms of joining the Eagle Investors Discord server, look into the description below to see our website, which is eagle-investors.com. You can join our Discord server from there. We post daily watch lists on there with our team of moderators, and we also post our daily trades as well. We have equity plays and options plays as well. We also discuss portfolio allocation methods and key current events that we're looking into the markets as well. Some other things that we include is specific bots as well for your charting needs, as well as looking into options volumes as well and unusual options activity. So if you're interested in the markets and interested in day trading, I highly recommend joining the server. You can join for free just by clicking the link in the description. Thank you and have a happy Easter.